With the market update for the second quarter of 2015, I'm Joe, Head of Research for East China. In the residential market, March's mortgage policy easing and several rate cuts since last November helped release pent-up demand from upgraders. For the 20 cities JLL tracks, total sales volume in the mass market surged nearly 16% quarter-on-quarter. Likewise, sales in the high-end segment were up 73% from a quarter ago. With sales momentum substantially improving, developers start to regaining pricing power. Over the quarter, 12 out of the 20 cities we monitor witnessed a price gain. In the Tier 1 cities, price growth accelerated in quarter 2. Some developers raised their sales price by as much as 10% in the past 3 months. We expect the strong sales momentum will carry over into the second half of this year. Sales volume will continue rebounding over the following months, while price growth is likely to accelerate in the Tier 1 cities. In the office market, China's domestic financial companies continue to show strong demand for Grade A office space, while multinational tenants focus on their expansion efforts mainly in the Tier 1 cities. Among the 20 cities we monitor, Shanghai performed the strongest in terms of rental growth. Meanwhile, Shanghai saw strong buying demand from large private domestic companies who are looking to house their headquarters. In other Tier 1 cities, we continue to see rents increase as well, while rents remained largely flat in most of the Tier 2 cities. In April, 3 new free trade zones in Guangdong, Tianjin, and Fujian province were established, and the Shanghai Free Trade Zone was expanded to include several downtown business districts. This move shows the new leadership is committed to applying important reforms to a large part of China, which would benefit the office market in the long run. In the retail market, the long-awaited import tax cuts was announced during the quarter for a small set of imported goods. The gesture is welcomed by international retailers, followed by price cuts from several major cosmetic brands. Without surprise, department store closures around the country continue to accelerate. In the process, they vacate retail spaces in the prime locations, making room for better uses, such as flagship stores for international brands. In the Tier 2 cities, more properties saw rental growth flatten or even turn negative. However, there continue to be a few strong players who are able to maintain high single-digit rental growth. In the logistics market, demand continues to mainly come from e-commerce and third-party logistics, thanks to the rapid growth of online retailing. With a lack of new completions, vacancy in Tier 1 cities keeps declining, making room for some landlords to raise rents slightly. Vacancy in Tier 2 cities remain elevated, with new projects in emerging submarkets asking low rents. Rental growth in Tier 2 cities continued to decelerate or even entered into a negative territory. That was the second quarter 2015 market update for China. We'll see you next quarter.